So this past week, the Fed increased interest rates by 0.75%. This was a big shock to the market, a shock to home buyers, a shock to investors, just really, shockwaves across the country. I wanted to dive into kind of how this impacts an investment property, especially if you're thinking about using financing. So let's look at a $250,000 house as our example. So this is what we're buying it for. So let's think about, first off, if we're buying this at current rates, so I actually got a quote this week for 5.75%. The interest payment on this one is going to be $1,197 a month. That's just interest, ignoring any principal. If rates jump up to 8.75%, and trends are indicating this could be reality. So we don't know if that's a couple months or 14 days or 6 months, who knows. But let's say that you wait and you want to buy this same property, you're at $1,822 per month. So the difference of that is $625. $625 is going to be going out to interest based on whether you finance this now or potentially, this isn't for sure, but potentially if rates continue to trend up and you're at 8.75%, that's $625 less per month you're keeping in your pocket. So it's a huge impact of locking in interest rates now. A lot of people know this who are looking at buying a house. This is really hitting home because they might not be able to qualify for the house they were looking for. So let's think about rental demand. This same $250,000 house, we always shoot for the 1% rule. So the 1% rule is if a $250,000 house, I want to get $2,500 per month in rent divided by 250,000. That equals 1%. That is a phenomenal deal, and they're very hard to find these days. Let's be a little bit more conservative. Let's say you're getting $1,750 per month on this same house. We won't run all the cash flow numbers right now, but that's still probably going to make you a little bit of cash flow. These same home buyers that were trying to buy that house, they're not going to be able to qualify for it. They're not going to be able to buy it, right? And what are those home buyers going to have to do? If they still want a house, they're probably either going to have to drop their price or they're going to have to rent. You're going to have more renters and not enough places to live. So what could happen if that trend continues is this rental amount that you're getting now, well, who knows, maybe in this same short term, maybe you're getting $1,950 here in a couple months. So that's actually helping you. That's putting more money in your pocket. So you're losing $625, you're adding $200 here. So what we're doing, and I've heard a lot of other people doing this, is lock in the property now. Go talk to a bank. I've seen a lot of banks that will let you lock in a rate. If you have a purchase contract to buy a house, you might not have to close this week. You might close in a month. This is all based on trends. We don't know this for sure. But again, based on what we're doing, I think it's a great time to try to get into an investment property. Lock in your rate and see what happens with rents.